Hello students, in this video we will discuss some adjustments in financial statements. Interest on drawings. Interest on drawing is an income for the business. That's why it will be recorded in the credit side of P&L account. Credit side of profit and loss account. On the other hand, second time, it will be deducted from capital, minus from capital, or you can add in drawing plus in drawings, and the total drawing will be deducted from capital. Next adjustment is bad debts. First of all, what is the meaning of bad debts? Amount irrecoverable from debtor is known as bad debts. This is a loss for the business. This is a loss for the business. So, first time it will be deducted from the debtors, and on the other hand, because this is a loss for the business, this will be recorded in the debit side of profit and loss account. Debit side of profit and loss account, and it will be deducted from debtors in balance sheet. Let us take an example. Suppose our debtors are given in trial balance rupees 1,02,000, and in adjustment bad debts are given 2,000. So first of all we will record bad debts in debit side of profit and loss account because it is a loss for the business, and second time it will be deducted from debtors, less bad debts, 2,000. So the amount of 1 lakh will be written here in amount column of balance sheet. Next, provision for doubtful debts. Provision for doubtful debts or provision for bad debts. Provision is prepared for future losses. This is treated as current year loss. So, first of all, debit side of P&L. First of all, it will be recorded in debit side of profit and loss account, plus in bad debts, if bad debts are given, and second time it will be deducted from the debtors, minus from debtors. Suppose in adjustment it is given that we have to prepare provision for doubtful debts 5%. So calculate 5% of 1 lakh. 1 lakh into 5 by 100, 5,000. Less new provision, 5,000. And this is also a loss for the business. So this will be added to the bad debts. Plus new provision for doubtful debts. 2,000 bad debts amount and plus 5,000 provision. Total loss will be 7,000. Now provision for discount on debtors. Provision for discount on debtors. Discount is given to the good debtors only. And what do you mean by good debtors? After deducting bad debts and provision for doubtful debts, the remaining debtors are good debtors. We will provide discount on 95,000 only. And suppose 2% is provision for discount. So we have to calculate 2% of 95,000. Less provision for discount, 1,900. net amount of debtors will be recorded here. This provision is also loss for the business. So it will be recorded in debit side of P&L account. Provision for discount on debtors, 1900. So right here, number one, it will be recorded in the debit side of P&L, and second time minus from debtors. Next adjustment. Now we will discuss some adjustment related to goods. In these adjustment, the goods are going out from the business, not in the sales form. Let us understand drawing in goods. So what we have to do when the goods are going out of business, we are not selling, but in other ways goods are going out. Number one, when goods are reducing, minus from purchase. Once we will deduct it from purchases in debit side of trading account. And second time minus from capital, because drawing always reduce the amount of capital. Second adjustment related to goods. Goods given away as charity. The goods are going out, but we are not selling. So same point is there, minus from purchases in debit side of trading account. And second time, charity is an indirect expense. So it will be recorded in the debit side of profit and loss account. One more adjustment. Same adjustment as above. Goods given away as free sample. You know, free sample is an advertisement. So goods are going out as free samples, but we are not selling it. So minus from purchases. Number one. And second time, because advertisement is an expense for the business, that's why it will be recorded in the debit side of profit and loss account. Next, goods lost by fire or accident or theft. That means abnormal loss of goods. Minus from purchases. So once it will be deducted from purchases in debit side of trading account. And second, it is a loss for the business. So it will be recorded in the debit side of profit and loss account. If these goods are insured and insurance company accepts some claim, that claim will be recorded in the asset side of balance sheet, and the remaining amount will be treated as loss, and this will be recorded in the debit side of P&L account. Suppose goods costing rupees 10,000 were lost by fire. So first of all, 10,000 will be reduced from the purchases, loss by fire. 10,000 will be reduced from the purchases because goods are lost by fire, rupees 10,000, and insurance company has accepted the claim of 6,000. So insurance company will become our debtor. That will be recorded here in the asset side. And the remaining 4,000 is a loss. And we will record on the debit side of P&L. Loss on fire. Yeah, loss by fire you can write. 4,000. So this is the treatment of goods. Thank you.